All right, hey, good afternoon, everybody. It's 2:15. I wanted to shoot a short video and go through uh, the crop report and what happened afterwards today, because I think we have some really interesting things setting up, and I just want you to be aware and thinking of it. And I said it was short. I'll try to keep it short. We have a lot to go through. So the report that the USDA put out today was really pretty neutral. They didn't move the needle on corn or soybeans. They did increase world stocks on wheat, and so that sent the wheat market a little bit lower. And we'll get to that today. But really, the report was benign, but the price action wasn't. So what the chart is ahead of you is the July to December corn spread chart. Okay. So if you just take all the trading action and you subtract July minus December and you plot it, that's what this chart looks like. Okay, that's the spread, and it's currently trading at 39. There's a saying that goes, first you rally basis or cash price, and then you rally spreads, and then you rally futures price. That's kind of an old merchandiser's adage, and I do think that there's a lot of truth to it. And what I want to show you is that on this spread a year ago or earlier this summer, we inverted the July contract to $1.12 above the December contract. And then we sold it all the way off, and we sold it all the way down to almost to a carry. So remember, the futures market trades in different months for a reason. It's like the floodgate on a dam. When supply is abundant and you have plenty of it, or the reservoir is empty, what do you do? You close the floodgates. And so what the futures market does is it moves itself to a carry. So this spread actually goes all the way down and it goes to negative. So if we had lots of corn and we had an abundant supply, what we would do is we would sell the front month off and we would push it to below to where the market is in contango. So you want the December contract to be above the July if you have lots of supply, because you're encouraging people to store it. That's where we get the term carry from. So if you put a big enough discount into the front month, then a merchandiser can look out into the future and sell it, and then the market pays him to carry the grain until a future time. When supply gets really, really tight, the opposite happens, and we invert. In a futures market, it's called backwardation, where we actually take the carry out of the market and we disincentivize the storing of a commodity. So the market calls it to the market, or the floodgates open, the reservoir's too full, we got to push the water out. So we got to open the floodgates, get it out of the bins, get it out of storage, get it into the supply chain so we can control price. That's kind of how these future spreads work. And so when we don't talk about them a lot, but we watch them consistently because they're usually not that exciting. This isn't very normal. To see the November to December spread move like this is very unusual, okay? And there's a saying as well among merchandisers that big inverses have long tails. So if we look at last summer's inverse, it's even wider than this. And so by long tail, it means it takes more time to bust through all the tightness. So what we saw today, let me zoom back in here on this. What we saw today, I think, was really important. We saw the December contract lag the July. So you saw old crop, which is July, exceed December by a whopping 5 cents. That's a big move in this spread. And as you can see, it's been a big move all the way up. So what we have is we have a move higher, a move lower, and now we're pressing on the upside. And what does an uptrend look like? Well, it's higher highs and it's higher lows. And so if we're going to explode corn higher and we're going to take it to, say, $6.50, $7, then you're going to do that by leading in the front month. You're not going to rally the back month without rallying the front. That's just not the way the market is wired. So in this setup, we've been looking for this. We've been hoping it would happen. And so this has our full and unbridled attention, because if we can explode up out of here on this front month spread, then that tells you that the market is rethinking the government supply numbers, right? It's encouraging, it's trying to pry it out. It's calling the market. It's calling the grain into market. It's creating competition for those bushels, and you're seeing that across the basis levels too. You know, we've been talking about this for a while, that the basis levels are really kind of crazy, and so it makes sense that you would see that what would follow a big basis rally would be a big futures spread rally, and along with it, the futures price would rally as well. So you've got a breakout of this spread above the cloud. We're looking at this at 42 to be a big number, and I think it could go a lot higher once it really breaks free and some news starts to materialize. So let's look at what the front month corn did. Okay, this would be March, and I think this is important. I want to draw some. Sorry, that's soybeans. I want to get to March corn. Where am I? Let me do this. Okay, here's March corn. There we go. Okay, so there's some things on this chart that I really like, and there's some things on this chart that I really don't like. And I think what that means is that we're boiled down to be explosive one way or the other. So first, and then I'm going to clean this chart up a little bit. We're going to start drawing some lines on it, and we'll kind of walk through step by step what we're looking at. So first and foremost, we're above our cloud, right? We started to move higher today. We've held above where we were 26 days ago. Tomorrow on a higher high would be a nice little breakout up above this. Clearly, we're closing at nice high levels. In fact, today is the second highest close all the way back since looks like July or June even for the March contract. So today was a big close. We had a big bullish engulfing candle, but we didn't get enough to break out the top. So what's good about this chart is the engulfing candle. It's nice that it's the highest close. It's nice that it's in the upper end of the range. And it's also nice that it's held all kinds of trend line support. So I'm going to put some channels on here because it keeps breaking these upward channels, and I want to show you what that looks like. So if we put a channel, if you snap it from this low to this low, and then just copy it and put it up on the intermediate high between the two lows, you get an upward channel. And you can see that this has held within that band. And then the next thing I want to do is put another, not a channel, but I want to put another trend line between these two lows, and then I really want to connect it to here. So bear with me, because we've got a lot of trend lines here I'm getting ready to put on. And then if we connect the peak to this peak, you can see what we're doing. Okay, this is a lot of lines. I know that, but kind of follow through with me. You can see we're up into a tremendous amount of resistance. We've got the peak from August 12th crop report day right here at $5.99. We've got the psychological $6 mark. We've got the downtrend resistance line from the summer peak to the first intermediate high on June 10th. We've got all of these lines all pegged together in a very, very tight window. So I think the next few days are really critical, because if we're able to break up above, come back down and test successfully and hold, then I think we're set to challenge the 640 high in due time, especially looking at that spread number. But you can see we got a lot of homework to do, because this is an awful lot of resistance. And then to cap it off on the bearish side, you've got this 13. If you guys have been around me a long time, we like to sell 13s. You know, you typically get sell-offs after you get them. Here's one where you had a sell-off. Here's one where you didn't. Here's one where you were a couple days early before a big sell-off. Here's one where you had a big sell-off. So they tend to forecast weakness. That's their intent. It's called a sell countdown. And so we do have a sell countdown right into all of this resistance clustered. But we have it on the heels of a bullish engulfing day. We have it on the heels of oscillator breakouts. So our MACD is crossing the zero line. Our RSI is getting is zooming higher. Our stochastics are zooming higher. So we have conflicting signals when it comes to these indicators, and we have that inside this consolidation zone. So what does that mean? That means that if you're short, you would definitely want to ratchet stops here because this could get really explosive. If you're long, I think you're okay as long as that spread that I showed you just a little bit ago holds. So what we're looking for and what we're really going to key off of is what this spread does, okay? If this spread starts to turn around and weaken, then we're probably going to take some defensive action. If it doesn't and it continues to explode higher, then corn is, I don't know where it'll go. I think it could be a really significant move if any type of news breaks. You know, what could that be? Well, pretty simple. It could be La Nina building in South America. It could be that we're trading at $6 with, you know, $1 over basis in Western Kansas, and we're not slowing down any type of demand whatsoever. You know, it could be something like that. And so the balance sheet is just getting tighter, not looser. Where does that project to? Well, on a weekly chart, if I put this in on a projection off of this wave 2 low right down here, your first target is coming up out of this cloud, and I've told you this yesterday. A move up out of this cloud is explosive. Your average move is $2, and where does this count to? That counts to 885 as your first major target point. So that would be just a little bit over $2 from where we are on that setup. So the stars are really kind of aligned technically for corn to break out much higher. But I don't know if it needs a catalyst or not. You know, we've talked about this for months. What the USDA says the fundamentals are and what the analysts say the fundamentals aren't being reflected in the cash market. And so far, the spreads and the price are more indicative that the cash market's right, not the analysts. So stay tuned because I think the next move in corn is significant. So what did soybeans do? Soybeans, look at that. Big old bullish engulfing shadow following corn. We didn't quite break the week's high, but the reality is it could be imminent. They didn't give the bulls or the bears anything to eat or anything to even really fight over. They just didn't touch anything. So we're back to trading the good old fundamentals that we know, which is a massive U.S. crop, massive acres and massive crop growing in South America, exports that are lagging. Everything has turned to pot fundamentally, but yet here we are holding 1280 and continuously finding buying support on any break. So I think the market is very much digesting something here and could be on the verge of a significant move higher. All right, so let's talk about the market that misbehaved. So here's your Kansas City wheat. This is in the July contract for next year. We talked about this yesterday, that we thought that it could come down and come in and test this level. This is the level that we don't want it to violate. This is the 770 level. If that goes I think we got potentially bigger issues in wheat, even though nothing's changed from the bull story. We haven't created any new supply. We haven't. We definitely haven't gotten our crop out of the woods, right? In fact, it's drier than it was a year ago. So I don't think that the bull story is done in wheat. And if corn keeps going, I don't see any way that wheat doesn't outpace corn back to the upside, especially if corn were to move significantly. I'm not saying that's what's happening. The fundamentals are disconnected in all these markets, right? The fundamentals in corn should be working higher. The fundamentals in wheat should be working higher, and they should be working lower in corn, and the opposite is happening in both markets. So that's got to rectify itself at some point. You can see this 13 here. We've got the follow through to it. That signal's been satisfied. We're looking for that support to hold and probably enter a re-ownership position for guys that want to re-own down into that level. I think that's a really nice risk reward because the forecast up to this level, it forecasts above $9 easily, probably up into that 925, 950 level. And if corn really works higher, probably putting pressure up around the $10 level. So that's a lot. I understand that we don't know exactly where we're going to go, but this technical versus fundamental picture is going to resolve itself sooner or later, and it could happen in corn if we fail at this level here. So we're going to be paying really close attention to it the next few days, and we want to make sure that we're ready to do something if we don't get some follow through to it. I'd love to see a big day up tomorrow to kind of just really put a damper in this resistance level, because once it's broken, remember, resistance becomes support, and that could become a really big base of support if it were to break. All right, I hope that is somewhat helpful. If it triggered questions, please call us. Remember, there is significant risk trading futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great weekend. I will talk to you next week.